evening, it's 9 p.m. This is the India development debate, and straight to the topic of discussion tonight. The good news first, the economy is picking up pace, giving hopes that the aftershocks of the note ban and GST are a thing of the past. GDP growth jumped to 6.3% in the September quarter from a low of 5.7% in the previous 3 months, giving a big breather to the government and market players alike. And the icing on the cake is the stellar performance by the all-important manufacturing sector, which grew at 7% in the second quarter compared with 1.2% growth in the previous quarter. Mining and electricity generation were the other key growth propellers during the 3 months to September.
Indeed, and now the bad news. That's from the farm fields. The agriculture sector continues to be a laggard with a meager 1.7% growth in the second quarter. Non-payroll government expenditure is not impressive either, while the all-important construction sector has fared badly too. What do the numbers really tell? Have we already seen the worst effects of demonetization? Has the slowdown induced by GST waned? Will the next 2 quarters see a big bounce back? The big picture behind the Q2 GDP numbers is, excuse me there, a big discussion and debate right here on the India Development Debate this evening. And I'm being joined by a very, very special guest, Minister of State for Civil Aviation, and somebody who understands Indian finance and Indian economy. Jayant Sinha joins us live right here on the show tonight. Thanks very much, Mr. Sinha, for being with us. 6.3% GDP growth, 6.1% GVA, of course looking a lot better than 5.7% where we fared in the first quarter. Is the government convinced that this is a reversal, slowing growth after 15 quarters? Or do you believe we can declare a reversal only after we see growth over the next few quarters, 3 to 4 quarters, and then call it victory?
Supriya, what is very clear from the data is that the economy is shifting gears. All along I have been maintaining, and of course my colleagues in government have also been saying, that we are going through a very fundamental structural shift in the economy. And when we do that, when we go from, let's say, 3rd gear to 4th gear, we are going to have a period of adjustment, and then the economy is going to really take off when we go into 4th gear. And I think the data is beginning to show that. We've introduced major structural reforms as far as our economy is concerned. Obviously, demonetization and the formalization of the economy, GST, the bankruptcy code, the recapitalization of the banks, new monetary policy, all of these, as far as the economy is concerned, are very fundamental structural reforms. And the economy has to absorb all of that, the economy has to deal with all of that, and then move to a new growth trajectory. And I think what we've just seen is the inflection point as the economy moves into this new growth trajectory.
Mr. Sinha, despite the strong rebound, most people in the market believe that the best case scenario for this financial year is a growth of about 6.5%, which will be lower than what was projected in the FY18 budget. Would you agree that 6.5% is about as much as we can grow this fiscal?
Well, that is simply going to be a function of what growth we saw in the first and the second quarter, and then the acceleration that we see in the third and the fourth quarter. So somewhere, between 6.5–7% or so is what we should realistically expect in terms of the acceleration that we're going to see overall in terms of GDP growth rate for the year. I think Q3 and Q4 is where we are going to see the real acceleration kicking in, and we should be well north of the 7% in my view for both Q3 and for Q4. Please remember, of course, that the global economy also is really showing very strong signs of growth as well. And with the global economy and those tailwinds also propelling us, we should see significant acceleration as well. Demonetization, of course, is largely behind us. The economy has been remonetized. Digital transactions are growing very quickly, and largely the first adjustment, the most major adjustment associated with GST is also over. So under those circumstances, we really should see a strong acceleration. And in any case, Q3 and Q4 seasonally for us also is when momentum picks up. And so I'm sure see an acceleration as Q3 and Q4 emerge. But for us, of course, 6.5%, 7% this year is absolutely not satisfactory. We, I think, have been able to position the economy so that it can grow in a robust way over 8% for a long period of time. So unless we cross 8% growth and are able to sustain it over multiple years, I don't think we'll be satisfied, because that's really what it takes to put India on the path to sustainable prosperity.
I'm glad at least somebody in the government is saying that 6.3% is not what we are willing to uncork the bubbly on. But Mr. Sinha, given the fact that the government has front-loaded expenditure and fiscal deficit is 96.1% for up until October, going forward, the private sector, do you believe, will be able to carry from here on? There is a limit to how much the government can spend. It's foolhardy to imagine that the government engine of investment can keep revving up.
No, that's exactly right. And I think what we are going to see increasingly is now that GST is being settled in terms of business practices, in terms of the way businesses are absorbing how this is going to rework their supply chains and so on. I think we'll now see the private sector increasingly picking up the growth burden. And so we'll see that government will have somewhat less of a role to play, and the private sector will play increasingly a more important role. So we certainly expect that as well. But I would caution in terms of the numbers for this year to compare them to last year, because we are obviously completely overhauling the indirect tax structure. And so comparables to previous years are going to be difficult to do because the revenue collection this year is going to proceed on a completely different basis with an entirely new indirect tax structure. So let's wait for another month or two to see what happens on the revenue side before we come to any conclusions as far as where we are headed in terms of the fiscal situation. I certainly think that revenue collections are going to pick up as GST stabilizes even more, and then I think the whole fiscal situation will be viewed in a very different light.
How are you reading the data on gross fixed capital formation? The finance minister spoke about it and indicated that's a positive sign. Now, while it's grown at 4.7%, which is obviously good, but seen as a percentage of GDP, it's actually declined. And that's a worrying signal, isn't it? Because that's an important metric of investment. How worried are you on that account?
I'm not worried, Sandeep, because I think that sometimes the data tend to not provide a full picture of the economy. And I often give the example when we talk about gross capital formation about what's happening in the aviation sector. You know that we have 500 planes in the sky right now, but we have firm orders that have been placed for another 850 planes. The vast majority of these 850 planes, and even the planes that we've ordered in the last few years, have come in as leased equipment, not as equipment that has been purchased. So when equipment is leased, that doesn't show up in gross capital formation, particularly because these planes are being leased from Ireland in most cases. So it really is not showing up as gross capital formation for our economy. But of course, that's not showing the true picture as to what's happening in terms of growth in the economy or even investment in the economy. So we have to be very careful about how we pass these numbers, how we interpret these numbers. We really have to go to the underlying drivers in the economy to understand what's really driving the economy right now, what are the new and innovative ways of financing that are happening, and then we can really get a correct and true picture of what is happening in the economy. But really, growth is being led by different sectors as this new economic cycle gains momentum. It's sectors like aviation, it's renewable energy, e-commerce. These are the kinds of sectors that are really leading the growth, and the underlying dynamics of these sectors, the way in which they use capital, all of this is very different from the past. And so again, the comparison with the past, trying to understand it on the basis of very rough approximate macro numbers, I don't think provides a true picture of the vitality of the economy as it exists right now.
That's true. Vitality of the economy perhaps not being captured by some of the old methodology. But Mr. Sinha, what about exports? That continues to be the elephant in the room, doesn't it? We've grown by just 1.2%. When we've grown at 8 to 9% growth, we've seen exports grow by 10 to 15%. And for any economy to have a significant sustained rate of growth, it's important that exports do well. That engine of growth does well. On that account, how big a concern is it that when the global economy is rebounding, our exports are really not picking up pace?
The good news as far as exports are concerned, Supriya, is that our industries and our companies continue to be very competitive globally. Again, when you look at it in terms of gains in market share, if you look at it in terms of contract wins, they're continuing to do quite well. What we need to be able to do, of course, is that we need to get this GST adjustment behind us. There have been a number of issues that we've been dealing with our exporters so that they can take full advantage of GST. So we've got to get the GST process behind us to really power exports forward. And the other thing that we have to work on is the currency. I am of the belief that our currency needs to be made more competitive so that we can better compete globally as well. So there are some underlying factors that we have to address, but once we address that, because our inherent competitiveness is there, Supriya, I believe that our exports will pick up momentum as well. Of course, global growth has just restarted. So as global growth also gains more and more momentum, I think you'll find our exports doing very well also.
And I'm sure, Mr. Sinha, is the trend in agriculture. 4.1 dropped to 2.3, and now the agriculture sector grew at 1.7%. Given the extent of the economy that's dependent on the extent of the population dependent on the agriculture, surely that's a number that you're not going to be, that the government is not going to be comfortable with. And when you see it in the context of the fact that the Rabi sowing has also not been has been lower this year, then that presents a slightly worrying picture on the farm side of the economy.
No, there are a lot of efforts underway. The Honorable Finance Minister said today that if you think about the next budget, the priorities are going to be infrastructure and the rural sector. So as far as the government is concerned, we are directing our efforts tirelessly towards strengthening agriculture, strengthening rural areas. And we are doing that through a variety of mechanisms. Obviously, it is through better MSPs, it is to be able to make sure our agricultural markets work well. Obviously, it is to be able to provide the necessary infrastructure in rural areas so that people can bring their produce to market and get good prices for that. So all those efforts are underway. Of course, we've been lucky that we've had a good monsoon. And so I think once this harvest is brought to the mandis, we will see a pickup in growth there as well. I can tell you in my own home state of Jharkhand, virtually every place that could have seen a crop to be planted and a crop to be available for planting, that has happened, and we are all expecting a bumper harvest at least this growing season.
All right, before we wrap this, two quick last questions, and one of them, of course, has to do with the headwinds, and one such headwind is crude oil. It's gone up by about 23-24% in the last 3-4 months. We've been very lucky with crude. It's been a very benign regime. We've been able to leverage that to our advantage. How much of a headwind do you see crude becoming? I'm presuming it will not derail the economy, but is it not going to significantly reduce the freedom that we've had on account of a benign crude oil regime?
No, that of course is very important for our economy, Supriya, to ensure that crude stays within a certain price range. Everything that we've seen and everything that the experts tell us suggest that crude is kind of capped at 65-70. So we are very much hoping that the shale oil cap that everybody talks about is going to come into play, and crude oil prices are going to be in that $60 to $70 range, which is absolutely fine as far as the economy is concerned, and is fine as far as our current account deficit is concerned, because we can certainly manage crude at those levels, and that's a fine equilibrium to be had between the consumers and the producers of oil if we stay at that range. Of course, when it gets beyond 70, that's where you'll start to see more stresses as far as our economy is concerned. But everything that we are seeing just now suggests that crude prices are going to remain in that range and not go much beyond that. At the same time, you also have to recognize that even as far as energy is concerned, Supriya, that we are going through a major structural shift as well, with renewable energy picking up as a major source, with electric vehicles picking up as a major means of transportation, with the railway minister announcing that we are going to move towards 100% electrification. All of these would indicate that our dependence on crude in the long term is going to come down, and the sensitivity that our economy has to crude prices also over time is going to diminish.
Mm-hmm. Quick last word, Mr. Sinha, and that is to do with counter-cyclical stimulus. And, you know, I must point out that there was this clamor for fiscal stimulus from various quarters within the government and outside, and you were one of the few who didn't join that chorus, and you sort of held your view that there should not be a fiscal stimulus. And I'm sure now with the Moody's upgrade, there's going to be more pressure on the government on that front. But do you still believe there's scope for counter-cyclical stimulus on the monetary side, or do you believe, given the way the inflation is picking up, especially food inflation, that window on the monetary side is gone?
Yes, now that I'm not in the finance ministry, I can be a little bit more forthright in terms of my own views as far as monetary policy is concerned, which is that I think you know, we can definitely benefit from lower real interest rates, and we are hopeful, you know, as far as aviation is concerned, as far as other capital consuming sectors of the economy are concerned, that real interest rates come down for us, and that we are able to use that as a way to propel the economy forward even faster. Clearly around the world, most economies are actually following a policy of very low, if not negative real interest rates. So that's the world around us. While at the same time in India, we have been pursuing a different kind of monetary regime, and I think that creates somewhat of a disadvantage for us, both as far as currency is concerned as well as the cost of capital is concerned, which I alluded to earlier when I spoke about exports as well.
Mr. Sinha, always a pleasure chatting with you and getting your perspective on the Indian economy. Appreciate you taking the time and joining us live at ET Now on the India development debate this evening. Thanks for joining us. Let's take that story forward and debate the GDP numbers. Is it reason for cheer? Is it reason for caution? What's the road ahead? We've got a stellar panel joining us on the show this evening. Dr. Rakesh Mohan, former RBI Deputy Governor. We've got Ms. Shobna Kaminini, President of the CII. Swaminathan Iyer, Consulting Editor of ET Now. Sadanand Dume, columnist, joins us live from New York as well. And we've also got Maithili Busturmat, our Consulting Editor as well on the show this evening. Dr. Rakesh Mohan, let me start off with you. When you saw that number of 6.3%, what was your reaction? What a relief, or what's the big deal?
Well, certainly a relief looking at the numbers of the last quarter. So that's certainly very welcome. Of course, one would have to wait for a couple more quarters to have a better understanding of the kind of recovery taking place. And since one has only seen basically the ball figures that have been released today, one can't, whereas it's absolutely clear that this is a relief, that there is some recovery that has taken place, but it's really difficult to comment in depth and without getting much more data in the next few days and of course the months to come.
All right, Swami, let me bring this to you. 6.3%, it's an irony that we're actually celebrating that number, but is it fair to assume that the demons of demonetization and the slowdown induced on the GST are a thing of the past, they're behind us?
Well, firstly, I mean, the economy is bottoming out, but what a low bottom. I mean, I find some people are getting very excited about going up to 6.3. I mean, 6.3 is pretty pathetic. If you remember, after the Great Recession, we bottomed out at 6.9. We are well below that particular bottom right now. So, I mean, some people are saying thumbs up. I would still say, you know, where are your bottoms? Bottoms down, thumbs up. So I said, you know, okay, just as well if we are bottoming out, but we are still at an extremely low level. What is more, the whole world economy has been gearing up, and this year it appears to be, at last after 4 years, it is going to exceed IMF forecasts. The world is doing much better than it was expected to. at a time when the external circumstances are very favorable. Our overall growth path, frankly, has been disappointing. We would need to do much better. I think I also need to add that, as Supriya said, there was the problem from demonetization. Maybe the worst of that is over. There is a disruption of GST. Maybe it was not as bad as some had expected. At the same time, the maximum impact of these two was on the small medium sector, which is not well covered in the provisional estimates that come out. When these things are revised 1 year from now, I am pretty sure that the final figures will probably be distinctly lower than the figures we've been seeing, even of 5.7 and 6.3 for these 2 quarters. So as of now, I'm checking my enthusiasm. Things are still not good. They should have been much better at a time when the world economy was doing much better. And you can simply say, thank heaven for small mercies if there is a bottoming out.
Swami is very cautious. He's saying there's absolutely no reason for cheer whatsoever. What about you? Are you as cautious as Swami is, or do you believe that this is a clear sign of a reversal after 15 months of slowing growth, and that itself is a reason to be optimistic? Maithili?
Oh, that question addressed to me? Yes, sorry. Yes, I would agree with Swami, except that I wouldn't be so despondent, but I think it definitely is an improvement. I wouldn't call it a turnaround or a dramatic improvement, but certainly it is an improvement, particularly if you look at the granular details. The manufacturing at 7%, that is particularly heartening, because manufacturing is where the jobs are going to come from. And for successive quarters, we've seen manufacturing fare very poorly. Agriculture, yes, is a cause for some worry, but the fact is that we have a very high base. The previous fiscal, it was 4.1%. So from 4.1%, the very high base, 1.7 is not, one shouldn't look at it with too much of despondency. Add to that the fact that what Anand said is the fact that the non-farm contribution has been quite significant. And this is what we really need to do in agriculture to try and weatherproof our agriculture. So if the non-farm segment is contributing more, I would think that is good news. The only despondency that I see really is that the gross fixed capital formation, as you mentioned, Sandeep, that number has not increased at all. On the contrary, it continues to decline. So even as economic growth is looking up, the continuous decline in the GFCF is a cause for worry, particularly when it comes along with the very strict implementation of the IBC, which means that we will see a large number of small and medium enterprises perhaps go into liquidation, apart of course from sizable number of large units, where again we will find asset value being destroyed and maybe many companies going to liquidation. So I think the combination means going forward the news may not necessarily be so good.
I'm going to take this across to Shobhana Kamineni, and she represents Indian industry as President CII here. Ms. Kamineni, the point that Maithili made, some people are erroneously pointing out the gross fixed capital formation, but the reality is at 4.7%. It's declined, because 4.7 of 6.3, and so in absolute terms it may have gone up, but otherwise it has declined. How concerned are you about the fact that fresh private investment is not really picking up? Because there are limits to what the government can spend. It has already reached fiscal deficit levels of 96.1% by the month of October. Its hands are perhaps going to be tied if fiscal consolidation is to be achieved. So are you concerned that private sector investments are just not breaking ground?
So we hear about this all the time, Supriya. And first I'd like to say that, I've been hearing a lot of economists debate this, and also the ministers debate this. From an industry standpoint, we knew that Q2 was better than Q1, but all of us are actually in Q3 mode, where we finished 1.5 months of Q3, and so we're seeing this economy, we're living it, and we're actually seeing movement upwards, cautiously but steadily. And when you talk about the gross capital formation, yes, it was it's not to what it was last year, but it sure was better than the previous quarter. And I can tell you that we've spoken to many industries and many associations, and all of them are actually talking about, I mean, all of them are seriously thinking about new investments. And like we had earlier said that, I mean, 3 months ago, I said the same thing, that that people are going to start investing in capacities, if not in Q4, at least most definitely in the next financial year. So I have room for cautious optimism, and I'm listening to all this fascinating debate. I think it's important, but we also have to think, you know, the worrisome is really exports. When do we get over, you know, some of the pains that are left over of GST, and the high interest rates, the NPAs are still out there.
We will talk about those issues in detail as we take along, as we move forward in this program. But Sadanand, I mean, look at the irony of the situation. We've grown at 6.3% this quarter, and what's trending on Twitter, obviously promoted by the government, is Unstoppable India with 6.3%, you know, 6.3% growth. Tells you a lot about the mood in the country. But well, you've been critical of the economic policies over the last couple of years. But would you concede that you know, that despite all of that, the fact that you know that this indicates a reversal is a positive signal in itself for foreign investors?
Well, first of all, that hashtag should really be Unstoppable BJP IT Cell rather than Unstoppable India. And you know, listen, I'm going to quibble a little bit about this sort of, you know, framing this in terms of cheer and despondency. Obviously, it's good news to go up 6.3 to 5.7. Obviously, we have some reason to believe that the bottoming out is behind us. That at least in terms of what is formally measurable, some of the worst effects of demonetization are probably behind the economy. And this is good. It's an upswing. We should all welcome this. Should we therefore be hyperbolic about it? And the answer is no. And I have to agree with Swami on this, that, I mean, just think about this. What are we being hyperbolic about? 6.3%? I mean, in what world is that adequate?
That's a fair point indeed. Dr. Rakesh Mohan, will come to you. And given the fact that the government has front-loaded most of its investments, most of its expenditure, and the fiscal deficit is at levels of over 96% already, by when do you believe private sector is going to be ready to carry forward investment, to start investing in the Indian economy, to carry the load from here on, if I may?
Well, I think that indeed is the key issue, because in fact, if you, in terms of looking at the prospects for much higher growth in the coming few quarters, you have to keep in mind that gross fixed capital formation has been very low for more than a year, if not longer. So obviously the growth that we get in the coming quarters is dependent on what has already not taken place, in a sense, in the last quarters in terms of extremely low fixed capital formation. And obviously that has been affected by the large, by the twin deficits in terms of corporate balance sheets and the banks. And that is still work in progress. Let us not forget that the NPA resolution is going to take quite some time. The bank recapitalization, of course, is very welcome, but once again, both demand and supply for credit will take time to recover. And therefore, whereas I agree with both Sadanand and Swami, look, it's certainly a matter for relief that growth has gone up again, but we need to be quite cautious, looking particularly at the investment situation. Second, the export situation looks pretty grim, and somehow we have convinced ourselves, although that the exchange rate is not that important. I was glad to hear that Jayant Sinha did make a mention of that. The fact is that relative to 2004-05, by the 6-country real exchange rate index of the Reserve Bank, we are 30% overvalued in terms of real exchange rate. If you take the 36-country index, about 15%. So the fact remains that we are at least 10 to 15% overvalued. This is a bus that we're going to miss unless we correct the exchange rate system. because as has been mentioned, the whole world is now recovering after a long time. This is indeed the time to really ramp up exports, and that will not happen unless the exchange rate becomes more competitive. It is also the time over the next couple of years when there will be a lot of manufacturing moving out of China. We are just not in the picture of getting that manufacturing. So I think that that whereas this recovery is very welcome, we really need to be much more cautious in terms of what we expect and really concentrate on all the things that have to be done to get the private sector capital formation, private sector activity going again, and exports is a major part of that. Apart from the exports also, the exchange obviously affects import substitution in the sense that with the highly elevated real exchange rate, our imports are much higher in terms of merchandise imports, and the Indian producers not able to compete with the domestic market either. So it's not just exports.
Let me come in on that, and I distinctly remember, exactly a quarter back when that 5.7% number came. You were on this very debate, and you made this point that we can forget about growing at 8 to 9% as long as we don't fix the problem of exports. Because when we last grew at that pace, exports were growing at 15%. How big a concern is that? And do you agree with Dr. Mohan that one way of looking at it is looking at the rupee? Jayant Sinha made that point as well. Rajiv Kumar, the vice chairman of the Niti Aayog, also made that point earlier in the evening on ET Now. Is it time that the government should look at intervening in the currency market?
This is
Swami?
a fundamental issue. As I said, I said.
Go ahead, Swami. That was for you.
Yeah, go ahead. Yeah. Okay. Yeah. Well, yes, I've been making this point consistently that no miracle economy has ever become a miracle economy without having export growth of 15%. We are staggering. In absolute terms, our exports are less than they were 3 years ago. There's been some slight pickup. And I think it can be argued that we've done somewhat better in volume terms than just in value terms because of what has happened on the price of the refined products. Nevertheless, if you cannot get this thing going, I would say forget about doing 7 to 8% on a sustained basis. Now, if we are going to improve, now Rakesh Mohan has raised the point of the exchange rate. I have reluctantly come around to the view that perhaps this matters, but a lot of research shows that the state of the world, the world economic growth, world trade growth is much more important than just the exchange rate. Let us see what happens. There was 1 month when exports seemed to pick up. The next month they fell again. Some people are saying this may be partly because of the disruption of garment exports by a fall in the effective subsidy. Let us see going forward. If we do not get a significant pickup, then I think there would be a very strong case really for trying to do something about the exchange rate. Over and above that, of course, we need to improve our logistics. We need to improve the ease of doing business, the turnaround time, just the cost of our getting stuff from the industrial point to the ports and exporting them. We are worse off in some respects even than Bangladesh and much worse off than China. We have the situation where we have very high railway freights because we're using high railway freights to subsidize passenger fares. So in effect, we are taxing exports in a wide variety of these ways. We would need to tackle all of those. But yes, if we don't get exports cracking, and I don't just mean a slight growth, if we don't get galloping exports at a really fast rate of 15% plus, I don't see this country doing the 8% that Yashwant Sinha is yearning for.
All right. We'll take it across to manufacturing, that no 8% growth if exports are not going to pick up. But Ms. Shobhana Kamini, manufacturing has been a heartening thing. At a growth rate of 7%, this has been the highest in many, many quarters. But is it fair to say that the non-farm and non-government expenditure-led part of the economy is beginning to fire?
Sorry, the non-farm, non-government expenditure? Hello?
Beginning to fire, given the manufacturing at 7%, what does manufacturing at 7% really indicate?
To a large extent, I do agree with you that that some of the investments that have come in earlier have really helped to boost manufacturing. And we must also understand that, you know, capacities, there's only so much that you can do with efficiency, and all these have actually been crossed. So now we're going to see a period of where investments are going to be required, and new manufacturing capacity is being created. And especially we're seeing this in the auto sector, we're seeing this in construction equipment. So there's certain sectors that are actually firing very well. There's great hope that the railways, extensive contracts that are going to be given out, and when you know, you had earlier spoken about renewables. So these are areas where more manufacturing will take place, and we're going to see growth in these areas. And I think that it's probably a good reflection that Make in India is also working, that foreign investment into India is still going strong. If you look at food processing, we had almost every major manufacturer come to India, think about what they can do into this sector, and I think that has huge potential. So there, pharma is something that has always been a winner in India, but we just have to do more, and this will help in exports. So the CII has actually identified 3 or 4 sectors that, you know, India can be number 1 and 2 and in the world. And I think that these are areas that require some more help from the government in terms of helping us grow and add more capacity, create jobs.
Fair enough. You spoke about the agriculture sector briefly as well. Maitri, you have to comment on that, because that's a very worrying sort of number there of 1.7% decline from 2.3% the previous quarter. It was 4.1% in the second quarter of last fiscal. And this, given that the Rabi sowing has also been lower than last year, is a worrying sign. A clear indication of the fact that on agriculture, there seems to be a bit of, you know, complete lack of focus as far as policy making is concerned.
Well, yes, unfortunately, that's entirely right, because even though this government has set store by saying that we're going to double farm income, what are we seeing when onion prices go up? The government immediately imports some minimum export price. So in the agricultural sector, we really haven't allowed the animal spirits to flourish, unlike in industry where in 1991, we underwent a major reform process and let market forces play their part. Agriculture is still heavily constrained, both on the input side as well as on the output side. There are all kinds of controls. When you take any sector, particularly sectors like sugarcane, there are so many controls. It becomes really impossible for farmers to market their products, get a good price. Even though we have talked about an ENAM, etc., it really hasn't worked at the ground level. There are so many restrictions on the farmers, mandi tax, all this continues. At the same time, public investment has not really picked up to the degree it should pick up. We've talked about the Prime Minister's Fasal Bima Yojana, but at the grassroots level, it really hasn't translated into actual insurance for the farmers. Again, minimum support prices. It is good in a way that farmers, actually the minimum support price has not increased as dramatically during the UPA regime, because to that extent inflation is kept under control. But farmers suffer very often because the input prices are in the meanwhile increasing. So I think agriculture is one sector where the government really hasn't brought sufficient attention to. Every time we talk of doing something for the farmers, but when it actually comes to following through with action, we always fall short. Unless we do something about it, even though the impact on GDP may not be so significant, given that agriculture's share in GDP is shrinking, in terms of the human cost, given that about 60% of our population is still dependent on the farm sector, I think it's high time the government focuses on the farm sector and does more to ensure that the farm sector is insulated from the vagaries of the monsoon.
Okay, let's talk about crude oil. I mean, I do want to address some of the headwinds. We've spoken about some of the tailwinds. And Sadanand, to you then, we've been big beneficiaries of crude being at levels of 40, 45. This government has been particularly lucky. It has leveraged it to its advantage. But what next? I mean, crude has gone up. Is $60 to $65 a barrel the new normal? And is India prepared for this? Because anything that happens on crude oil is going to have a huge impact on our economy, on our fisc, and everything else. Is India really ready? Is India prepared for the new normal, which seems to be oil prices at the levels at which they are? I mean, look at how silently they have gone up to levels of 60, 65, 24% appreciation in just about 3 odd months.
No, I think that's a very important point. I'm not going to hazard a guess on which way crude oil is headed. I do not know. But I think it's fair to say that the government has been a huge beneficiary of low oil prices. And in fact, much of the progress we saw, in fact, I would say virtually all of the progress we saw in terms of the fiscal deficit really came from this bonanza that the government got. Now, I just want to sort of step back for a second, and we're examining something that is so minute, which is kind of quarterly growth. And I want to sort of put this in perspective a little bit for your viewers. Now, on this manufacturing debate, for instance, yes, we've seen an uptake in quarterly numbers, but where in the larger sense is the Indian economy headed? And I feel that on that larger question, is this government able to generate enough private sector jobs, bringing it back to Maithili's point, for the vast numbers of people who are stuck on unproductive farms? I don't know if we are any closer to that question being resolved in a truly positive way. And so amidst all this hype about the turnaround, which I think is welcome, we have to continue to ask the big questions. Right? Is this government able to revive animal spirits in the private sector more broadly? Or is this more of a sort of, PR exercise which says that, look, we've got ease of doing business and look, we've got Moody's and all that is great. But how does any of that matter unless we have private businessmen investing and creating jobs? And I guess to me, that's a question that is not answered by this 6.3%.
And I think since Sadanand's speaking about the slightly longer term picture, let's not obsess about one quarter growth. It's a fair point. So Dr. Mohan, I'm going to come to you and give the contra argument. And many would argue that the slew of steps taken by this government, whether it's demonetization, GST, even the IBC ordinance, are all steps towards making the economy cleaner, a more formal economy, and that itself will come with a bunch of upside gains, which we probably are not able to see right now, but it could, and some of the high frequency data are indicating, stronger recovery. Would you say that this short-term pain that we're seeing of slow growth is probably going to be worth it when we look at the picture from a slightly more medium-term point of view? Or would you share Sadanand's concern on the fact that not enough is being done to kickstart private investment, to create jobs, and that is the big challenge?
I'm afraid I have to share Sadanand's concerns because the slowdown had taken place much earlier. The export slowdown has nothing to do with either demonetization or GST. That had taken place much earlier. We have completely shied away from labor reforms, which are absolutely essential if labor using manufacturing is to get going. This is a short window that we have for the next couple of years. If we don't do it, then I'm afraid we have lost this window because all those jobs are going to the Philippines, Vietnam, Cambodia, Bangladesh, etc. Second, I think that we have not done any reforms in the railways, which is indeed absolutely necessary for the kind of infrastructure and logistics that we need that Swami had mentioned. So I'm afraid that, yes, I share Sadanand's views on the longer term issues. And as I said earlier, one key indicator really is the very low private sector investment that has taken place, not just since demonetization or GST, but since much earlier. And for that to be revived, demand in the country has to go up for people to be investing more. And once again, I would repeat what I said about the exchange rate. Somehow in India, we have begun to feel that's not important. And all the issues to do with the excessive costs of infrastructure, logistics, interest rates, etc., those are the higher costs are indeed taken care of by a more competitive exchange rate. If we didn't have those costs, the exchange rate wouldn't have to depreciate as it needs to. So I think, yes, we do need to think much more about a sustainable and sustained effort to get the economy going, and keeping in view in particular that, look, we do have to resolve the NPAs, the banks have to start functioning again. So it's not going to be a 100-meter sprint, it's going to be more like a middle distance run, if not a marathon.
All right, a middle distance run, if not a marathon. But Swami, come in on that. The upside of structural reforms, the cost of cleanup as far as the Indian economy is concerned, has this been worth it?
there is a serious problem on cost. After that last land acquisition bill of 2013, I mean, in effect, it was suggesting the price of land would be 4 times the last registered price. This has an impact on the land market. India, I think, earlier had the advantage of having relatively not such expensive land, but now land is expensive. Your labor costs have gone up very substantially in the last few years. They are probably double the rate of what you have in Bangladesh if you're trying to compete with Bangladesh in exports. It is much higher than, shall we say, in African countries like.
Swami, the point that I was asking you is that do you believe the structural reforms that we have seen, and I'm calling them structural reforms because that's what the government does, whether it's demonetization, GST, IBC, they've taken a toll on the economy. There's been a cost that we've paid for. Is the cost justified? Is the cleanup cost, is what I'm calling it, is that justified?
That is something which we will know in due course. I suspect it will be justified. If you say we have lost 2% of GDP, that's quite a lot of money. But if you say we have invested 2% of GDP in future cleaner growth, then a 10% return on that 1 to 2%, you only need to increase GDP by 0.1, by 0.2 to say that was a good rate of return on this particular investment that we have made. If you look at some of the data on the increase in the income tax collections, increase in income tax filings, I mean, the data are still too early to make a very strong pronouncement about. But I would say the data are encouraging. If we do move towards the formal sector, I do seem to think that black money appears to be less attractive to hold than it has been in the past. So I would say yes. You have paid. The real problem, I think, was that the demonetization was bungled so badly. The whole thing could have been done at much, much lower cost to the public. So the implementation was terrible, and therefore the cost was unnecessarily high. But even on that particular cost, would the long-term returns justify it? Too early to say, but I suspect the answer is yes.
No, the thing with demonetization is it's not just disrupted the economy, it's also disrupted every economic debate in this country, because you can't do a debate without talking about demonetization. So that's how sweeping that reform has been. But, Maitri, are we sort of being too pessimistic here? Are we fundamentally underestimating the upside that this formalization of the economy is going to bring at large? Sadanand made a very valid point, but given the political reality, it's unlikely that this government will invest its political capital on land or labor reforms. In that reality, the fact that they've taken giant leap on formalizing the economy, getting tax evading traders under the net, are these reforms that are tough to, the upside of this, is it tough to quantify? And is that why we are sort of being too pessimistic on the medium term prospect of the economy?
Well, yes, in macroeconomics, it's always hard to quantify, and particularly when you go in for structural reforms, it's going to be very difficult to say when we're going to get the returns, if at all, and what is the medium term, what is the long term. What is certainly clear is that there is short-term pain. The question is, can we manage that short-term pain better? As Swami said, in the case of demonetization, it was very badly bungled. We could have actually reduced the cost dramatically. In the case of GST, I'm not so sure, because the government did try, and over the past few weeks it has been trying to ease the pain. On the IBC, again, I think the government needs to do much more thinking and see, can we minimize the cost? Yes, you need to punish the promoters, those who have indulged in fraud, those who have taken banks for the ride. But do you need to punish the entire promoter class? Do you need to ensure that see that almost anybody who's connected, whether it's a promoter, whether it's a guarantor, whether it's a subsidiary, all of them are ruled out of the resolution process. So I think there are ways and ways of doing it. Structural reform is essential, but can we do it in such a way that the pain is minimized? There will always be pain, and the benefit is maximized over the medium to long term. It's difficult to quantify, but I think there are better ways of doing it, and that is where very often I think the government jumps the gun and does not do sufficient planning, doesn't think through the consequences of its action, and then we end up paying the price for it.
Okay, completely running out of time here, and I'll ask each one of you to give me a quick wrap answer there. And Ms. Kamineni, if I may come to you, and this has to do with the 3 things that you would want the government to now focus on, you would want the government to now do.
So, I love the fact that this entire debate was brilliant economists talking in favor of the industry and what needs to be done. It's all those things that they just spoke about, that we have to be able to make this, help industry work much better, help industry create more jobs, help industry create new capacities that will come from lowering the interest rates, that will come from, just watching the dollar. I think watching the rupee rate, I think it's a bit too strong, and helping, exports, smoothing out the GST. There's still a lot of the refunds of exports that is blocked working capital. So we absolutely think that the reforms were taken at a good time when the economy was at a high, and as long as that we can, as Swami said, the return on the pain, if you look at it in that perspective, that in the long term it might work out to be a good thing. And I think that's very important for industry, and a perspective even from the government side, that we have to feel more engaged in this. We do believe that this whole thing about construction needs to come back, and the government has to continue spending strong. They have to continue this investment cycle and really start releasing the defense contract jobs, the railway contract jobs, the roads that they've promised. All these, we have to resolve the NPAs, and like Maitri said, don't throw out the baby and the bathwater with regard to all promoters, because there are a lot of them that can have this has happened to them under really terrible circumstances, especially the MSMEs. So I think that there's a real case for us to look into this in a much stronger way, and I agree with so much of what has been said today. Fundamentally, Q3 is looking good, and industry is looking at here and now, short term, medium term, and long term. We do believe in the India story.
I'm sure everyone in the panel does believe in the India story, but what's also evident, Swami, is that 6.3% growth is not bringing with it any sort of feel-good factor. At least hearing this panel of experts. So what's the way out? Is there scope for some sort of counter-cyclical stimulus? And obviously, it can't be on the fiscal side. Do you see it coming in on the monetary side, or should we not venture down that road at all? Swami?
Oh, yeah. Well, okay. Yeah, as I said, on the structural side, a large number of things have already been mentioned by Rakesh, by Maithili. We need to work on those because, frankly, we did the 9% growth earlier on at a time when the whole world economy was booming, at a time when our own productivity levels were fairly low, and we were able to do a lot of catch-up. From here onwards, increasing our productivity is going to be the key to faster growth, and that requires structural change. We've got to a stage where our cost of our land is much higher than that of competitors. The cost of our labor has become more than our competitors. The cost of our capital, the rate of interest is higher. The cost of the infrastructure and turnaround is higher. The cost of electricity is higher. Now, on each one of these, we need to work on so that we become more competitive. And we need to have a drive for increasing productivity across all these sectors. Unless we do those, we will not be able to get back to that 8% growth. We got to 8% earlier on in circumstances that were relatively easy. The circumstances are much more difficult now. The effort will have to be much, much stronger.
Final word to you, Sadanandan, and very crisply, just tell me, does this blunt the opposition's narrative of economic mismanagement? And how will you put it into perspective, the fact that the Prime Minister today admitted when he said that there will be a political price I may have to pay for the economic decisions that my government has taken, and he's aware of that?
I think it certainly blunts the opposition narrative. I think 6.3 is a much more comforting number than 5.7. But I want to make just one quick point in closing, which is that the government has done a good job of selling the idea of a turnaround to the public, using things like Moody's, ease of doing business, and so on. But what it really needs to focus on is selling the idea of a turnaround to the people who matter, who are investors. And that cannot be done through marketing. That can't be done by Twitter campaigns. That is only going to be done by doing actual reforms. And I hope that they go ahead and do that.
It's time to actually take some tough decisions and do actual reforms, and that's what's going to bring in more investment. That's the word from our panel. Thank you so much. It's been such a pleasure having this wonderful panel debate the Q2 GDP data. Shobna Kamini, Dr. Rakesh Mohan Swamy, Maithili and Sadananda. Thanks for joining us live on the India Development Debate. Up next, of course, is the political debate on the Q2 GDP data. Joining us is Nalin Kohli, Rajiv Gowda and Yogendra Yadav. Back in a moment with the political debate.
Stay right here with us.